Welcome to the Mills Knows Bills podcast. My name is Mills Bender. I'm the founder and CEO of Mills Knows Bills, where we help you, variable income earners, master your money in 90 days. The point of this podcast is to help you make the most of your fluctuating income so you can stop living paycheck to paycheck, pay off your debt twice as fast, and get on track toward reaching both your personal and professional financial goals. Now, as I continue to grow my team here at MKB, you may have some guest hosts from time to time. However, our goal does not change. Whether we're bringing in a guest speaker, having an in-depth conversation about our personal finances, or talking about a topic that is of interest to you, our goal is to help you master your money. Welcome back to another episode of the Mills Knows Bills podcast. I'm your host as well as CEO of MKB, Mills Bender. And with me today, I have a dear friend of mine, Carey, who we've run in the same circles for a while, but we really just recently connected maybe a year ago now.
I was thinking about that this morning. How long has it been? It's probably about a year.
About a year now. Yeah. I don't even remember the initial interaction.
It was here. I think it was here. I think Josh introduced us.
Yes.
I remember you walking into the office. I'm like, I know you. I've met you before. I've seen you before.
I know you.
Yes.
Put two and two together.
Oh, yeah.
That's awesome.
But it's surprising, though, because like you said, so many circles, especially the UCF community. It's shocking that we hadn't, rubbed shoulders before.
I mean, we had, but we also hadn't. We're both part of the alumni board for the College of Business.
That's right.
Never really...
No one-on-one time.
Yes. Yeah. So it's just kind of those recognition pieces. But anyway, perfect timing. Tell everybody about yourself.
Awesome. Where should I start? Let's start with this. Let's start with this.
Oh, no.
There's a little bit of green in the background.
Yeah.
Because I'm from Philadelphia.
Oh, my word.
I have to say, we are Super Bowl champions. The Philadelphia Eagles won the Super Bowl. There was no way I wasn't going to put that on.
I was wondering how long it was going to take you.
Just a couple seconds.
Just a couple seconds.
I am riding high
Brandon
today.
and I should have taken bets. Yeah. He was just in here.
I saw him and he came up to give me a hug and he goes, "You did it." I'm still processing it, but I just noticed the green.
It's for you. It has nothing to do with my branding at all. Yeah.
But from Philadelphia. And moved down in 2004 and pretty much went straight to UCF. Mm-hmm. Stuck a flag in the ground and did a couple things since I've been here.
That's awesome.
Today, I do two things. I own and operate a company called Boss Group International. We are a merger and acquisition firm. We help people buy and sell businesses. And I am the chief marketing officer at Coastal Investment Company. We're a private equity real estate company. We help successful people get access to and advice about institutional real estate and venture capital investment opportunities.
Honestly, both are so interesting. I wanted to focus today on the business broker / M&A side, but we will save a little bit at the end for the Coastal side because the demographic that listens to this podcast would benefit greatly from hearing more about what Coastal does. I know I've gone upstairs, had the conversation with Greg and learned a little bit more, and I get excited about it.
It's fun. Well, the cool part is, so historically, I've been a marketer by trade. Mm-hmm. And from, in college years, I owned a couple different types of marketing companies. But for 12 years, I owned and operated a marketing company that I just sold back in March of last year. So, wearing every hat that you could run in a company, which you're familiar with.
Yep.
We had a team of about 40 employees. We were doing 12, 13 million in sales. It was a nice, healthy company. For a lot of reasons that I won't get into today, I wanted to exit.
Yeah.
And marketing was primarily what I've done. And I'm shifting the narrative to now more on the M&A side. But what's beautiful is every time I sell a business for somebody, there's two questions that business owner has. Mm-hmm. What do I do with this money?
Yep.
And how do I kick the can or negate some taxes, right? Yep. Tax strategies. That's what Coastal does.
Yeah.
Coastal's clients are high net worth individual business owners that eventually want to exit.
Absolutely.
Right. So there's the two intersections of what I'm doing, where marketing is now just something that, as business owners, we always are marketing.
We're always marketing. We're always selling. Yeah.
And every business is a marketing company. How you get the attention of your client, right? That's the tactic. What your business actually does is different, but every business is a marketing company. So instead of being a marketer, I'm going to be a M&A advisor and broker and help people with investments. And it's a fun new chapter.
It's exciting.
Yeah.
Oh my word. Okay. So let's just dive right in then. So most of the audience is business owners, most of whom are in the blue collar space.
Awesome.
So let's start with, what is a business broker / somebody who's in the M&A space? Give us the definitions of both, because I know that there's somebody listening or watching to this that just has no idea.
And let's start with, so a business broker. And it's funny too, because I didn't realize that business brokers existed until I sold one of my previous businesses.
Mm-hmm.
And after that was done and I watched the process of my own business being sold, I was like, wait a minute. So just like a residential realtor, there's a business broker.
Yep. But
instead of selling a home, they sell a bit. Oh, okay, I get it.
Mm-hmm.
Well, I was a licensed real estate agent already. I was practicing on the side.
Mm-hmm.
And I said, I'm going to switch over to business brokerage.
Yeah.
I like business. I'm an entrepreneur. I would rather sell interesting businesses than homes.
Mm-hmm.
So the difference between business brokerage and M&A is it's not necessarily size, although that is probably the key common denominator. But business brokers is where you're selling a business. You're kind of selling a job.
Yeah.
Right. So individual runs the business. If that individual gets hit by a bus, that business stops running. Yep. Right. And it's not just the only characteristic of that, but it's typically a business where when I transact, another person's going to come in and do what the previous owner did.
Yeah.
I look at that more like business brokerage.
Mm-hmm.
You'll typically see those deals up to maybe about $2 million.
Okay. $2 million purchase price or $2 million
enterprise
top
value.
line revenue? Okay.
So, M&A is where a lot of times you're seeing, M&A stands for mergers and acquisitions.
There you go. Yep. I was about to say that. Pause.
Yeah, let's dumb it down. So a lot of times in business brokerage, it's a individual buying a business.
Okay.
Most of the times in M&A, you're seeing private equity, venture capital, family offices acquiring a business.
Yeah.
And then instead of operating it themselves, they'll appoint somebody to go do it for them, right? They're not going to buy the business and run it themselves.
Yeah.
They're going to appoint somebody to come in and do it. It's maybe a portfolio company or a bolt-on. Mm-hmm. So for the audience, it probably makes sense to talk size.
Yeah.
But we help people exit their business, and it's some people don't start their business thinking that they're going to sell it one day. Mm-hmm. They start the business for they're passionate about it or they trying to make money, whatever it may be. But successful business owners start a business with an exit plan. Mm-hmm. I'm going to get to X and sell. Mm-hmm. Unfortunately, most people call me when they're in trouble, when their business is going down. There's family issues, there's health issues. Mm-hmm. A successful person, a successful business owner says, my business is thriving, and then they want to sell.
Yeah.
I don't think it's defined by that, but that's, it's important. So, and you mentioned that a lot of your audience is blue collars, blue collar businesses. Those are my favorite to sell.
They're my favorite to work with.
Yes. I mean, some of the way that they think about an exit in blue collar businesses is so different than anything else because they're not thinking about it.
Yeah, exactly. They're like, wait a minute. I started off just me, myself, and I got too busy. I just brought in more team members. Mm-hmm. Okay, now this is making more money than I realized. Okay, now what? This is now an asset that's producing income, and I don't have to be here every day. Yeah. What do I do with it?
Well, don't have to be there every day is the key, right?
Exactly.
I just sold a business, and the individual metal fabrication business ran it for 32, 33 years.
Okay.
Still in there every single day, whether he had to be or didn't have to be. For his, he did.
Okay, I was going to say, did he have to be or did he want to be?
He had to be.
Oh.
He had to be.
Okay.
But the transition was so long that he was able to, bring on some people prior to the exit. So that was a little bit easier for the incoming buyers.
I was going to say, how much would that hurt the valuation?
It didn't get as high as it hurts it. That's something that I tell people all the time. If the business is running without certain individuals, that infrastructure that you've built has more enterprise value than if it's relying on a person.
Yeah. Yeah.
Systems, processes. But I love, the blue collar businesses where maybe they don't have an heir or somebody to leave the business to. And they typically have spent 20, 30 years running the business. Yeah. And they look up and they go, wow, I built something, but definitely my favorite businesses to sell.
Yeah. I was talking with a client the other day who he hired me back in February of last year, I think. It was right before I gave birth. And so I told him, I was like, listen, I'm building out my team. I'm going to be working. So don't be alarmed when you see I'm
massive in terms of my belly, right? Yeah. But we worked together, and his goal for 2024 was just make the same amount top line revenue, which was 5.6 million.
Solid.
A few months later, I start building out my team. I say, listen, I'm no longer the best fit for you. You need to work with this person instead. We get to the end of the year without even trying. He made 9.8 million.
Wow. That's
without
incredible.
even trying. And he's like, I thought I was going to get to 10 million and want an exit, but I'm still 4 years out from when I would even potentially pass it down to my kid. Now what? And so now we're having the conversation of, okay, well, you need to bring in some additional hires if you want to keep
Sounds
growing.
Like they need a management team.
You're going to very easily hit 13 million this year if you keep on the same trajectory.
That's incredible.
So, and it was funny because when we chatted just a couple of weeks ago, he's like, you kept telling me I was going to get close to 10 million. I didn't believe it. We got close to 10 million. I'm like, I told you the numbers don't lie. If you keep doing what you're supposed to do, it'll get there. But he does have the desire to either pass it down to his child or sell it. And so now we're 4 years out from that target and wanting to get there.
Good time to start having the conversation.
That's what I was going to say. Yeah. Is that a good time to start having that conversation?
Yeah, I mean, honestly, there's never a bad time to start having it because, business owners probably have a goal of when they want to exit, but you have to understand what it's worth today.
Yes.
And then how far away are you from hitting that goal to be able to exit?
Thank you.
And I know you preach that. Yeah. We've talked about
it, but it just, yes.
Having a temperature check a lot of times, and especially in blue collar businesses, it's heads down, work. You're not taking a step back and looking at the quantitative data. You're just coming in and how do I serve my customers? How do I build my business? But it's really important. And I'm guilty of this too. When I was running my marketing company, I didn't have an exit plan.
Yeah.
I didn't have once we get to this number. But honestly, it's something that everybody should find out now. And we typically give, a courtesy free broker opinion of value to let people know where their business is, if it fits certain criteria, of course, just so they have a benchmark.
Yeah.
And let's talk about what's next. I also think that an interesting part of what we're doing with Boss Group now is we're trying to help people with the growth space where it's kind of like a growth consultancy. I haven't fleshed out how I'm going to do this yet because
you and I talked about this Okay. Yeah. All right.
So it's very simple. I would say 7 to 8 out of 10 people that come to me to want to sell are not ready to sell. And it comes down to a variety of things that fall into 3 buckets.
Okay.
Financial reasons, meaning either their financials are not organized, or it's a lifestyle business, or there's just not enough income there. Operations, like we talked about, the owner of the business is the business. There's no standard operating procedures. There's no part. There's nothing for continuity. Or 3 is marketing. There's no brand value. They're just not getting enough leads or sales. Some businesses I've sold for millions of dollars don't have a web presence, right? There's a lot of different things, but they typically fall into those 3 buckets. I think that it would be a great health check for every business owner to find out what is the business worth today and where am I lacking? So then they have the roadmap on what they need to do to exit. Because when you come to somebody and go, I need to sell now, it's a problem.
It is a problem. It's because your business is not as liquid, right? Yeah. We talk about the definition of liquidity. It's how quickly something can be converted to cash without losing value. A house, it could be worth $1 million, but if you need to sell it right now, you're probably not going to get $1 million for it. It's not very liquid.
Yeah.
Your business is the same way. So you need to make sure that you're putting all of those processes in place to give yourself that fighting chance, if nothing else.
Yeah.
You and I chatted a few months ago over lunch, and I said, I have a goal for the fintech side of my company to sell it for 20 million. And we talked about what the financials would need to look like to get there. And so then I went back home, and later that day I
reverse engineered
fleshed out everything that I would need to do.
Yeah.
And so now I have a 5-year plan of, all right, so I want 490 subscribers in this platform at this price point. This is how I'm going to get there. In order to get there, I need to get MKB on the CFO side to have this amount of clients, to then bring a developer on, to then build it out.
What you just did right there, that quick. Nobody else does that. A lot of people don't do that. They don't have a North Star.
I have jobs.
Yeah, touche. Yeah. But I mean,
people don't think about it like that because they don't know the right questions to ask.
Yeah.
For you and I, it comes naturally.
Sure.
It's just, you've grown multiple businesses. It's how your brain works. I've worked in a lot of smaller businesses, and I've seen, even before I started my own company, how they weren't setting things up properly and how they were just I need to make more. I need to make more without an actual game plan, either operationally or financially, as to what that could look like. There was a company I was working with that was making $2 million top line every single year, all through word of mouth. No online presence, no way to take orders online. It was a print shop. They could have easily gotten 10 million if they had just made a few different changes.
Sure. Yeah. Seeing that type of stuff, though, is what I really enjoy. Like people ask me often, what are you going to do when you retire? First of all, there's no shot I'll ever retire. But I love in my space when a business owner comes to me, tells me their story. I learn about how different businesses are unique, how their processes are, whatever they do. But then I always see the gaps, and I always see what I could do to step in as a fractional CEO, buy the company, grow it, and flip it.
Yeah.
So just the general consultancy of like businesses to help them get to the next level. I mean, that would be so much fun to work on at some point.
Yes.
Now, there's people that do this for a living. They buy and flip businesses. And people ask me all the time when I say that I'm in M&A, they go, oh, do you buy and flip? I said, no, I could.
Might be, the next 10 years.
Yeah, we'll see. It's fun.
Yeah. I could probably see myself doing that at one point too.
Well, so I will say this. I think you have the background to do it in anything. If I could have went back to school and studied something different, because a huge UCF advocate and supporter, I did not learn a lot in academia. I learned a lot through doing and running my businesses through college.
I think that's kind of normal though.
It is. But how about this path? Ready? You study accounting because your father's an accountant. And you take all the accounting classes. And then when you graduate, you're going to go work for your father. And then you're going to take over your father. It's a linear track.
Yeah.
Okay. So I studied general business because I didn't know what I wanted to do, but marketing was always a passion.
Fair.
So I just feel like the tracks of people not knowing what they want to do is pretty similar. We have the integrated business program now at UCF, which is awesome. Teaches soft skills like negotiation and teamwork.
Yeah.
So all that type of stuff I think is critical. But if I could have went back, I would have studied finance, because I think understanding economics and financial markets, capital markets, and just how to leverage debt. I've never had debt in any of my businesses. I don't think so though.
No, it's cool that you have had the success that you've had with your businesses without leveraging debt. I don't see that often.
No, it's a feather in the cap, but I still wish that I learned finance better because I could have accelerated the growth. But I think that, having a financial background and being able to come into any business, you have knocked out probably the biggest barrier to entry for every business owner.
Yeah.
If people are asking you to be a fractional CFO for their business, case in point, right? They either didn't do it themselves. They know they're not the best at it. You probably come into some pretty messed up financial situations.
I told a prospect the other day, which me, I'm not very, I'm forward, but I'm not aggressively forward. So I had a conversation with this guy and I was like, listen, after hearing about all your financials, I'm going to be really honest with you. Please. I said, you can't afford to not hire us.
Yeah.
You can't.
That's great.
He's like, wow, are you for, yes.
Did you close it?
No, because he's stubborn as hell.
Yeah.
But you know what? It's if somebody doesn't see that they want to grow and the cost of our services is going to help them get out of their sticky situation faster, they're not the client I want to work with anyway. Sure. We want somebody who's going to be resilient, who's going to value our services.
Give you the keys.
Exactly.
It's actually a really good point. So when I was running the marketing company, I started my job was bringing business. And then it shifted to learning how to also run the marketing agency. And then it shifted into I was our CFO. I taught myself all these different types of, reports and everything, and really enjoyed the function of CFO. And I think if I would have had the chops for that earlier, obviously it would have accelerated growth. But I was fascinated with just looking at the data in a company.
Yeah.
If I had known about the concept of fractional CFOs back then, I absolutely would have hired you or a fractional CFO. And I think the fractional community, as it continues to grow,
it's growing fast.
And it's not just benefiting business owners to hire fractional C-suites. It's benefiting the people that are actually doing it because there's some variety. There's right? Like, that's got to be fascinating instead of just working on the same business every day, that you kind of get to move around, right?
Yeah. I actually so now that I've built out my team, I only handle 3 clients. I'm not bringing on anybody else, but the 3 I handle are very different industries. I have a coach, I have a content creator, and I have ammunition dealer.
Yeah, those are pretty different. And you did that intentionally, I'm sure.
Oh, of course I did.
Yeah.
Of course I did. Everybody else, I was like, all right, you guys can handle this. These 3 are more complicated in nature.
Yeah.
But also I enjoy looking at the different businesses.
And that's one of the reasons why I kind of moved to the M&A space.
Mm-hmm.
You know, on the marketing space, I was able to move from client to client and help out with marketing. I was just helping their businesses grow.
Yeah.
I'm like, why am I doing this? I'd rather help my own business grow. But it keeps me really interested in, because I'm what they call diversified industries or an agnostic M&A advisor. I don't have a particular vertical that I focus in. And some say, including one of my partners, that is wrong and don't do that. And I understand how much more focused you can be and how quickly you can grow if you stay in one space. Yeah. People are like, oh, have you sold this type of business before? No, I haven't, but I guarantee you I can do it just as fast as somebody else.
Yeah.
But I just like the diversity. I like a variety.
Yeah. I
learn different industries. I feel like the experience that I get touching different industries is something that is invaluable.
Yeah, I would agree. It's also being an entrepreneur. I'm sure you can relate to this. I get bored easily. And so rather than chasing the shiny object syndrome in my own business and different verticals I could potentially add right now, I kind of scratch that itch by looking at a variety of different businesses. So keeps me in line.
Okay, so here's a perfect story. I've definitely played in a lot of different businesses. I've owned a lot of different businesses since I've been here being in Orlando. And there was a period in time, I think it was about 2013 or 14, I had 8 operative businesses that I was either a silent owner, an active owner, or just owned a piece of. And I had this aha moment, which started with a midlife crisis. Maybe not early to midlife crisis.
No.
I had an absolute mental breakdown because I realized that it was impossible for me to be successful in the businesses because most of them, unfortunately, were relying on me to some level and my participation in the business that I could not give them the right amount of focus.
That's tough.
And the way that I was able to get out of those businesses was realizing that my passion is helping other people get out of their businesses.
Yeah.
So I narrowed it down to 2 things, the marketing company, which was doing great, and the business brokerage. An M&A firm, just so I could stop all of the different businesses that I had. I'll help other people exit theirs. That was kind of my aha moment. But during that time, it was an entertainment company. It was a restaurant. It was nightlife. It was, what else do we have going on? I was selling real estate. I had all these different things going on at once. And I was just like, it's not possible to be the jack of all trades because then you'll be the master of nothing. And that's crazy. That's kind of where I was like, okay, one path. And it really was 2 paths.
But they intertwine so well.
Yeah.
They really do. And so let's talk a little bit more about how you come alongside the business owner who does want to sell and why they should leverage somebody like you with your services and skill set rather than just doing it on their own.
Yeah. Well, the biggest thing that people don't realize is that it's an emotional process. And I've had big burly men crying at a closing table because they were happy that they sold, but also, bittersweet. So business owners will think that it's not an emotional process. Oh, it's just business. It's emotional.
It's your identity for so long.
It's your identity, but some of them 10, 20, 30, 40, 50 years. Talk about identity. It's ingrained in their DNA. So it's an emotional process and we help take the emotion out of it, right? That's nice. If there's going to be emotion, it's going to be between me and my clients that want to sell, not between seller and buyer. Especially if it's a sophisticated buyer coming in and they know that there's some emotional attachment, they're going to eat them up. So, the biggest thing is being able to take the emotion out of it. I think the second thing is probably education.
Okay.
It's actually a fairly simple process selling your business. There's a lot of twists and turns, but if you just wrote generally what the steps are, it's not that hard. But every single time that I'm walking a business owner through the process, which I love doing, you kind of dumb it down for them, so they feel really comfortable about the process. Selling your business, sometimes you only get to do it once. You don't want to screw it up. So you have the opportunity to leverage somebody who's done this over and over and over again that can give you quantifiable data on what it's worth. And a business is worth what someone's willing to pay for it.
We can talk about that in a second.
Yes. But, you need a little bit of a benchmark. So, it's a very difficult part of my job when somebody comes up to me and they said, hey, I talked to my CPA who shouldn't be valuing businesses, or just, I think it's worth X and I have to tell them it's worth Y. It's very hard. But, the biggest thing that we do aside from taking the emotion out of it and education is negotiating on their behalf to get the best deal in terms that we can.
That's awesome. We're
matchmakers. And in Florida, I belong to the Business Brokers of Florida.
Yeah.
It's an organization that allows for co-brokering. We have an MLS, multiple listing service, just like residential realtors, and we're governed by a code of ethics. It's a great organization, but it allows us to sometimes co-broke with other agents.
That's cool.
So the buyer pool gets opened up, right? If there's other agents that could sell my listings. And additionally, some of the services that we do is we will take a business owner's financials and we will bring it to institutions like the Small Business Administration, SBA, and SBA lenders. We'll get it pre-qualified for financing from a buyer pool. So if a business is pre-qualified from the SBA, most times a buyer, if qualified, can come in with 10 to 15% down to buy that business.
That's awesome.
Seller still gets cashed out 100%.
Yeah.
Government backed, it's a win-win.
That's awesome.
So there's just little tools like that that we know that a business owner is not going to know.
Yeah.
And of course, a black book of contacts. I mean, all across the United States. And I think there's 2.1 residential realtors in the country. I think there's about 80,000 business brokers. There's not a lot.
That's crazy.
And
there's like 80,000 realtors in Florida alone.
There's probably 80,000 realtors in our cohesive network.
There was down in South Florida.
Yeah.
I was part of the Miami Association of Realtors. There was like 65,000 people all in South Florida when I was down there. It's nuts.
And, what type of expertise are they giving you? No offense. I'm a licensed residential realtor. I sold real estate. It just, look at these fancy countertops and this, you could knock down this wall and then you could do now. That's more preference than it is. On the M&A space, we're talking about facts.
There's data.
And, it's a business owner should not take their eye off their business when they're looking to sell. That'll be the number one reason. Think about it. A business owner is going to negotiate on their own behalf and go through the emotional process of selling their business while they're supposed to be running their business. They're going to take their eye off the prize. Something's going to get messed up. It's a confidential process. And I think business owners, if they can stay focused on their business by not only just keeping it consistent with what it was doing prior to listing, but growing it, getting themselves out of the business, that's what they should focus on, not actually trying to negotiate their own deal.
So we talked earlier about the three buckets that you find business owners tend to have gaps: financials, operations, and marketing. What is a word of advice that you would give for each of those buckets to somebody who wants to sell their business?
Oh, this will be fun. On the finance side, you can only win once. You can win every year when you write off everything you can to negate your taxable income, right? And you don't show on paper. You don't show on paper like you're a nice, healthy business. Or at the end when you want to sell and you've had nice, clean financials. I hate paying income tax. You got to pay taxes on your business. So on the finance side, treat your business like a business, not like a lifestyle business. We can do a whole episode on that.
Oh, yeah. I talk about it once a quarter in one of our workshops.
It's a real thing. Now, look, I mean, every business owner has things that they can do that are write-offs that, they bleed the line, whatever. Yeah. But I've seen some crazy stuff. I've been a part of some crazy stuff. And it's very easy to tell a business owner that and they go, yeah, okay. It's so much easier at the end. I just got financials for a restaurant that has $1 million on the bottom line of their tax return.
Okay.
One chain, not a chain, one individual restaurant. That's incredible. I've never seen a restaurant with clean financials year over year, 7 figures on the bottom line of a tax return. Okay. And they're going to get top dollar for their business. Okay,
I thought you were going to say there's a hiccup somewhere.
No.
Okay, good. I'm good for them.
So on the finance side, it's definitely that.
Okay.
My advice on the operations side is for the owner of the business to write down everything that they do on the day-to-day basis and to try to find somebody else in their organization or hire somebody to do all of those tasks. Do it one by one. most business owners work in their business instead of on their business. You can work on your business and make it so much more successful by turning a knob, pulling a lever. But if you're in the weeds, you're not looking at your business.
Yeah.
So if a business owner can start looking at what they do and find a replacement for it, their business will be worth more and their lives will probably be a little better too.
Yeah. I mean, I think there's also something to be said that if you're great at your trade and you've scaled your business and you feel like you're not the best CEO, it's also okay to hire a CEO.
That was one of the arguments I got in with my ex-partner at the marketing company. I said, hey, we're growing. We're getting big. We should bring somebody in that can teach us a little bit. We're in our early 30s.
Yeah.
And, obviously that didn't happen. And it was a big turnoff to me.
Well, sometimes our ego gets in the way, right?
Yeah.
But I've been talking with a good friend of mine who he scaled the company bigger than he's ever expected. And he's saying, this is out of my wheelhouse.
Yeah.
I need to find a CEO. And it was hard for him to come to terms with that. But he's realized for a while that his director of operations has already been running the show for at least a year behind the scenes. Now it's just a matter of let's make this official.
Well, and at the end of the day, too, he's the business owner, right?
Mm-hmm.
So even if he has a CEO,
you still own it.
Yeah, you got the veto power.
Yeah.
No, I mean, you don't want to appoint a CEO and micromanage, but at the same level, it's ego, it's control. So I understand.
Yeah.
Psychosis behind that. And then piece
marketing.
of advice on marketing. So, excuse me. I'm a marketer by trade. Mm-hmm. Invest in marketing. That's it. Invest in marketing. Enhance your brand, refresh your website, make sure everything looks bigger than it is, spend money on marketing and advertising, come up with a plan. I'm not saying you have to go crazy, but make sure you're focusing on it because I will say that buyers, especially the professional ones, when they see a business listed for sale and they find the weaknesses in those businesses, they don't look at them like now they're devalued. Mm-hmm. They look at those as the opportunities, right? So if somebody comes in, they go, this business is doing X in sales. They don't have an e-commerce site. We could build that up and then spend. That's an opportunity. Mm-hmm. Whereas it was a weakness when they were evaluating the business. But I think that the majority of the weaknesses I see are related to the brand.
Okay.
The marketing or lack of advertising. So just do something.
Yeah.
Focus on it.
Yeah.
It's kind of a broad stroke piece of advice, but it's shocking how many people do not spend time and energy focusing on it. And I'll give you a kudos. You do a damn good job.
Like I said before, I cannot take credit for it. And there's even areas that I've identified in my own marketing strategy that I want to improve upon. Yeah. I'd like to run ads at one point, but frankly speaking, I'm not doing that because I know the pipeline, the funnel will get filled and I don't have enough systems and processes in place to weed out the unqualified clients. Yeah. So I need to build that out. Also, I know my team with the current infrastructure, we have capacity for maybe 40 more clients before we need to hire another CFO.
40 is a lot.
It is.
That's good capacity.
Which is giving me time to build out the VSL to then have those people get weeded out. So until I work backwards, I got the first piece done.
Yeah.
Now I'm going to build that out because I'm not handling most of the clients anymore. I have time to build it. Then we'll have the cash flow once we fill this out a little bit more to then feed into marketing side. So there's a lot that I get to improve upon. But in the meantime, I'm still going to do
You're
like
doing
this.
it, but you're also thinking about it. I'm just asking some of the business owners to think about it. Just a little bit.
Just a little bit.
And, when we ran the marketing agency too, it was, excuse me, we ran the marketing agency, it was agnostic as well. We didn't focus on any particular industry.
Yeah.
That was a little bit harder to be agnostic in because you're looking at, strategies and tactics that are completely different.
Yeah.
Trying to get people's attention versus trying to sell a business.
Mm-hmm.
I don't feel like I need too much knowledge about a space to be able to sell a business because the amount of effort that we put in on the front end of helping a business owner sell, we have to immerse ourselves not only just in that particular business, but the industry.
Yeah.
We have to understand what the competition looks like. Bringing your business to market is a challenge because the amount of effort to bring it out there it's intense. And you only get really one shot to get the attention of buyers.
Yeah.
So we put together really, really good packages for our business owners to the point to where we hear often these are the best marketing packages I've seen for all the businesses that we're looking at. We take a lot of pride in that.
I love that. Miller, how are we doing on time so far, friend? 34. All right. We have a little bit of time. I want to talk about Coastal. So the business owner sells their business. And I don't know if you take this approach. I always like to talk with my clients about, if you know you're wanting to sell, you should start having conversations with your accountant. Hopefully they're a tax strategist, please. Financial advisor if needed, any other financial professional at least 6 months in advance to figure out what you're going to do with that cash before you actually receive it.
Yes.
So that's just kind of the first piece. But a lot of people don't understand the types of investments that Coastal provides.
Sure.
They know that their financial advisor can put money in stocks and whatever. Their accountant's going to help maybe mitigate some of the tax liability. Tell us how Coastal solves both of those problems.
Okay. And I'll probably focus a little more on the investment side, because on tax, it would take probably a full episode to do that. But we definitely, for example, when I sold my business, I have an awesome tax strategy that actually turns into an investment. And the delta of writing a very large check for cap gains turns into actually an investment that's giving me passive income.
Yeah.
So there's a little teaser on some of the stuff that we do.
You don't need to know all of the tax information yet. You can actually just have a conversation with Carey and the rest of the Coastal team. But just know that they're going to help solve that problem too. But the investment side, because I think that's cooler.
So personally, I was one of the first 10 investors with Coastal, because our CEO, Greg Meerbaum's a dear friend of mine. I've known him for 20 plus years. And he had a large taxable event himself, and he's always been investing in alternative assets. But he pretty much solved a problem for himself and then turned it into a business by allowing others to participate. And that is how good businesses are formed. Solve a problem for yourself, offer it to the masses. So I believe in diversified investments. For me, myself, I have high yield savings accounts. I have some real estate in a portfolio. I have my market exposure with my financial advisor, who's myself. I have.
You said yourself.
I finally have committed to hiring a financial advisor.
That's,
all my friends, I have so many friends that are FAs and wealth managers at all the different firms.
How do you pick?
So I didn't.
I mean, that's fair.
I have another bucket of hard money lending, and then I got introduced to Coastal's alternative assets. Okay. So this is a good analogy. In my stock portfolio, I own REITs. Real estate investment trusts.
Thank you.
REITs are pretty much large institutional grade pieces of real estate assets that are bundled together. Real estate's a very safe investment because there's an asset behind it, right? It's not one of these new tech companies that could go to zero because there's nothing behind it.
Yeah.
So financial advisors, one of the things they typically tell their clients is put your money into real estate investment trusts or real estate backed stocks. So I've always had some of those. There's not a big difference. Frankly, there's no difference between the assets in that REIT and the assets that we build at Coastal. We are the manufacturer of the real estate. So if we build a multifamily unit, once that multifamily unit is built, stabilized, we will sell it to a company like Blackstone, BlackRock, KKR. The biggest REITs in the country are from those companies. So they buy the asset from us, and then they go to the Goldman Sachs and the financial advisors who then sell them retail to clients. And most people don't have knowledge about alternative investments. And then if they have knowledge about it, they don't have access to it. So again, the illustration is, if something we manufacture, it gets stepped on 3, 4, 5 times and sold at retail, well, the margin's going to be a little bit better when you actually build the asset.
Yeah.
We build the assets and we fractionalize them to everyday millionaires or people that have money to invest. And our deals are structured to outperform public markets. We typically target mid 20% returns. We're usually a 3 to 4, sometimes 5-year hold, depending on what asset it is. But we invest in the Sun Belt, which is the Carolinas, Georgia, Florida, Texas, Arizona, where people are migrating to.
Yep.
And we focus on the missing middle. So we're not building Ritz-Carlton, luxury residencies. We're building blue collar multifamily. We're building self-storage. We own, it's either the second or third largest privately held self-storage facility in the country. We build for rent communities, if you've heard of those.
Mhm.
We build car washes. We build assisted living facilities. These are alternative investments,
Mhm.
and we offer them at a below wholesale rate
Mhm.
for people to participate in. The wealthiest people in the country, Mills,
Mhm.
invest in alternatives.
Mhm.
Most of the people just don't know what alternative assets are.
Because it's not talked about.
No,
It's okay. Have I told you about the Uber driver theory?
maybe.
Maybe. Okay. So I was at a conference mastermind meetup, I don't know, about a year ago. And the guy on stage, whoever it was, talked about the Uber driver theory. And he said, if I'm in an Uber and the person driving the car says, oh my gosh, you should totally invest in crypto. He goes, that's my opportunity to sell crypto because it has become so widely accepted by the masses at that point
Right.
that the tables are already starting to shift. And it was funny because after I heard that, I came back to Orlando and I was working out and I was talking with my personal trainer and she's like, oh, what are you doing this weekend? I said, I'm looking at houses. Oh my God, it's such a bad time to buy. And instantly I thought to myself, this is a perfect time to buy.
Oh, yeah.
And so it was interesting hearing that theory of once it becomes widely accepted by the masses, the trend is already starting to shift. You're just not part of it.
Yes.
You're not seeing it. And so what I'm hearing, and to kind of clarify for the viewers or listeners, you guys are starting the funnel of what ends at what's most commonly accepted, which is the REITs.
Mhm.
And so as a result, because you're starting up here, your margins on that investment, they end up getting diluted
That's right.
because so many people have touched it.
Well, I don't think even a wealthy person, a net worth of X or Y, I mean, wealth is, I don't know.
Subjective to an extent.
But think about, you're driving down, you see a multifamily complex being built.
Mhm.
You don't ever go, I could probably own a piece of that, right?
No, because we just don't talk about it.
We don't talk about it,
Yeah.
but also, what we do with Coastal is we get these curated opportunities from our developer sponsors where the average person or wealthy person can't call up that sponsor and say, hey, I want to invest in this. It doesn't work that way.
Yeah.
When we're taking 20, 30, $40 million positions in these opportunities, even some of our clients write pretty big checks.
Mhm.
Our minimum is typically $100,000.
Mhm.
People can write $100,000 and own a piece of an institutional grade asset and get a way better return than if they own that in a bundled up, stock or REIT or whatever it may be. So, most financial advisors have a limited amount of items on their menu that they can sell you because they're governed by these large conglomerates.
Yeah.
Most of them don't offer alternative investments.
They don't, because it's just not something that is readily available. And there are barriers to entry if you wanted to go out and do it on your own. And so it's nice that you get to have a small sliver of that pie through something like Coastal. And I like how you have, I think you mentioned 5 different buckets of how you're diversifying your money.
Mhm.
I think that's great. I get asked all the time what my opinion of crypto is. I give the same response every time. I don't mind it as long as it's not your entire retirement plan.
Yeah. And, some people just go all in. And I would never even tell somebody to only go all in alternative assets. But the idea is if you have this diversified bucket, maybe the market's down and then the housing market's up and vice versa. So my strategy over the years was to create the buckets.
Yes.
Now the majority of my money is going to alternatives because I'm feet on the ground with Coastal.
You have everything else filled up though too.
I do have them filled up. But again, you want to keep adding to them. But I just think some of the stuff that we're doing with the alternative asset space is so groundbreaking.
That's cool.
And learning about it, being able to rub shoulders with our partners and all of these different development companies and everything, I'm seeing the opportunity. And it's going to be a good couple of years coming up for the alternative space. Yeah. And we still invest in some non-real estate backed businesses as well. We'll do venture capital, mostly on the growth side.
Okay.
We do a lot of growth equity raising for a series of companies or a series of platform companies from a PE group, but we do a excessive, abundant amount of due diligence on every single thing that we do. We see a couple hundred deals a month, but for us to actually spin one up into a fund takes a lot.
Yeah.
I think we're coming up to our 30th fund. I think we have 800-900 investors.
Wow.
We've raised a couple $100 million. I think it's like $350. And that's not including all of the tax dollars that we've helped save. So, the company has just skyrocketed over the past couple of years. Greg's building something incredible here. Our whole team, board of advisors, our C-suite, they're the best people. Some of them are my best friends.
Yeah.
I get to work with them, which is awesome. But it's a fun space to be in because I think that one of the common things between Coastal and Boss that I get to do is I get to educate.
Yes.
I get to teach people about the alt space. I get to teach them about M&A. And I enjoy that because I learned it. I was a student of it. I did it myself. That's one thing with Coastal too. Like all the partners, we invest our own dollars in this.
Yeah.
We're not raising money from outside people. And then,
just
we do this ourselves and we give other people the ability to participate with us.
I think that's cool. And by going straight to the source of the top of that funnel, if we want to call it that, you have more tax options than if you were to just take that money and put it right in the market.
Yeah.
So there's a lot we could talk about. We're getting close to the end of time here. So what I'm going to say is if you're a business owner who's looking to sell, or you have that as your pie in the sky goal and you just want to take Carey up on his offer to figure out what you're currently valued at, reach out to him. If you are an accredited investor or you want to sell your business and have something to place that money in and you want to learn more about the alternative investments that Coastal provides, reach out to Carey. So the best way that they can contact you.
2 emails.
Okay.
Am I supposed to give them now?
If you want.
We'll put them up on the screen because there's 2 of them. We can put them up on the screen.
Yes, they'll also be in the show notes or video description below.
Email's a great way to start, just so we can set a meeting. I really enjoy meeting clients one-on-one to answer their questions. So I'm more than happy, especially if it's one of your clients or viewers. I'd love to help out any way I can.
Perfect. So just make sure you check the notes if you want those emails. We will make sure that we put them there. Thank you so much for taking your time. This has been a lot of fun.
Pleasure was mine. Thank you for having me.
I saw Miller wave at me. I'm like, oh, already? This is going by fast.
I'm ready to keep talking. I had a lot of caffeine this morning.
We have a part 2. Yes, you did.
Yes.
We have a part 2 coming out. So make sure that you stick around. And I hope to see you guys on the next one. Thank you.